Hey everyone, Gary Nims here with Windermere, here for your January real estate market update. First part of these videos, I'd like to just do some stats, let you know the wins of the market. And then the second part of the video, just a general real estate topic that I get to pick. But you can always reach out and ask me to tackle any subject that you want and do my best. So without further ado, I'm going to share my screen here. And yeah, the real estate market, the pendulum has really swung. So what I want to draw your attention to, the same month last year, December 2021, 81% of the market was selling either above or at the list price. That was the wins of the market. And now the pendulum has swung the other way. So we got 86% of the market that's sold below the market, below the list price, or they've had a price change and then sold below the original list price. So what's happened with inventory right now is I'm going to tackle I'm going to show you the Seattle, and then we're going to show you the King County as well right after we update you with the East Side market. So 2.5 months of inventory right now. And the thing that I want to explain or draw your attention to is 2018 was a year where the Fed raised interest rates. They raised it 1%. Now we went up 4% in interest rate. And so you may ask, why are we, if we raised up 4% in interest rate, why are we only at 2.5 inventory? We should be at 10 months of inventory, right? Well, there's a few things that are causing that, and I won't go into that in this video. But there's some things that are kind of gumming up the market. One, for example, is if you have a 3% interest rate, do you really want to move to the neighborhood next door and then take on a 7% interest rate? But you're in luck if that is your conundrum, and I'll tell you a little bit more about that in a little bit. Let's look at East Side areas. Same kind of thing. 2018 interest rate goes up 1%. We go up 4%. We're still here in this range. We have less volume, 704 active listings versus 574. 368 was pending under contract at the time. 305 pending under contract at the time. There's reasons for that. And then let's go to King County, and same kind of thing. We got the same kind of inventory. Now, one thing that I just want to draw your attention to is the idea that we call the 1 in 10 rule. If interest rates go up 1%, your purchase power goes down by about 10%. Now, depending on what your down payment is and so forth, but that's the general rule of thumb. So that's kind of your market update, the wins of what's happening in the market. And now here we have some, here's the topic of my choice. We're going to talk and tackle recession fears. So what happens during recessions? Our economist, Matthew Gardner, put this little chart together for us a little while back. Some of you might have seen it. So he took the last 6 recessions, 73 to 75, 80, and so forth. He took these recessions and he looked at nationally what the national median house price was. Back here, some of us, we have cars that we've paid more for than these houses back here in the 70s. But when they went into the recession, 37,000 was the median price, 41K was the median price by the time that recession was over. 74,000 for going into the recession, 1980, 78,000 coming out of the recession, and so forth. The only recession that we saw that inverted was we went in at 290 in 2008. We came out of the recession, the technical recession, at 273. That was caused by the housing recession, and so that was a little bit of an anomaly, and that was what we called the Great Recession. Want to draw your attention now to interest rates. So here's what's happened in interest rates since January of 2022. It has been a steady increase. And if you guys have watched any of my videos, we've been talking about how the Fed continues to raise interest rates. And I want to talk a little bit about the spread of interest rates. So the federal funds rate versus what you actually can get a mortgage for. The bank's got to make some money, right? But before we talk about that, I want to tell you that when this chart was done just a couple of weeks ago, interest rates were at 6 3/4. New CPI index came out since then, and even though the Fed is still notching up rates, they did a 50 basis point hike in December. But even though the Fed is still notching up points, rates are actually coming down. Rates are based on supply and demand. They're based, they follow the 10-year treasury a little more closely. So even if the Fed raises rates, it's possible for rates to come down, and they have. So I was just speaking with a couple of my loan officers, and they're quoting rates for grade A paper with people with beautiful credit scores and good debt to income ratios. So they were telling me between 6 and 6 3/8. I've even seen some at 5. Now I haven't checked for a couple of days, and rates are changing daily. Now the other thing is, I am not a loan officer. I'm not quoting any rates, any specific rates. You got to talk to a loan officer and give them your own financials in order to get that kind of information. Now I'm going to show you this beautiful drawing that I just put together for you, specifically for you guys. Now this is what I want to talk to you about in terms of the net, the spread, the profit that banks make. So there's the federal funds rate here, 4.5%. And if rates currently are between 6 and 6 3/8, let's just say they were. Now this is their profit margin. What happens is the Fed may raise this, but based on supply and demand, and then also based on historically, let me just back up and tell you, historically, this number is usually about 1.7%, somewhere in that area, above where the federal funds rate is. But this was pushing 3% when the Fed continues to raise rates at a really big increment. Anytime there's unrest in the market, anytime there's uncertainty, those investors really want to pad and they want to make sure that if things keep going south for a long time, they're covered. Now you're starting to see that spread get smaller and smaller again, closer down to 1.7. And that is how the federal funds rate may go up, but interest rates will go down. And that's what we're expecting here. So here's rates are dropping from they're about at a 4-month low right now. But here is my disclaimer. This isn't a quote. I'm not a mortgage broker. This was a conversation with my lender, and I actually put this together a couple days ago. So that was a couple mornings ago that I had a conversation with the loan officer. Your rate's just determined by so many different factors. So last thing is, I want to talk to you about a strategy that could just save you or make you hundreds of thousands of dollars if you qualify. So, and that is this strategy of marrying the house, but dating the interest rate. Okay. Marrying, long-term commitment, we hope. Dating the rate, maybe long-term commitment, but it doesn't have to be a long-term commitment. You can refinance. And then this other little cute term that we like to say, marry the house, date the rate, and divorce rent. So anyway, there's your humor for the video. If you found that funny, I did. So buying the house at a discounted price right now, and we'll show you a slide in just a minute on what I mean by discount, and then refinance. So when is it safe to buy? Here's this chart that I wanted to show you. So the time that it's safe to buy, well, let's look at what the market has done. In December 2020, median price on the east side, and guys, I work the Seattle markets, the north end, the south end, anytime you want. specific numbers, we'll talk it through. I'll run these numbers for you, and then you can get a good idea of what's going on in your specific area. But we really developed a really nice base in 2021 in between 1.3 and 1.4. And then you can see how we just had this run where interest rates were low, money was very obtainable, and it went pretty crazy here on the east side. We were putting in a number of offers for clients before we got them under contract at times. But now we've seen a 25% decline from the hike. What I really want you to notice is here at this base, really, we've only seen about a 5% decline. So we're about around 1.3, 1.299. That's still a 14% increase from December 2020. That's still a pretty nice return, but houses are discounted right now. And so I want to give you this idea that if you're able to get into a home or you're moving up, it's a great idea to do that between now and the next maybe 4 to 6 months, because we're already seeing interest rates fall. Now, the last thing is I want to compare a scenario 2008 to 2023. So let's just imagine that you bought the median house on the east side for $583,000, $475,000. You put 20% down, you got a 30-year fixed loan, and here's your loan. And at the time, interest rates were between 5 and 7/8, 6%, 6.25 was about what interest rates were back then. Your principal and interest, now I didn't put in taxes or insurance, those are specific to the home, but your principal and interest payment is going to be $2,950 about, okay? So now your new value, fast forward about 14 years, we're just at the start of 2023, fast forward about 14 years to your new value, median price, 1,299, your mortgage balance, assuming that you didn't do a cash out refinance or any of those types of things as your equity has grown, your mortgage balance, $350,000. Your equity is $950,000. Man, congratulations. You're a millionaire. Fantastic. That is, if you would have bought at really the peak, this is the peak, 2008, of what happened in the market, 2007 through 2012 really was kind of the trough there. So, so the idea is, if you're able to make a move and you know somebody who wants to make a move, here's some of the great points about avoiding the mosh pit when interest rates go down and we start getting a lot of multiple offers again. You don't have to, right now, you don't have to release your earnest money at the beginning of a transaction. You don't have to pay the difference if the appraisal comes in low necessarily. That's all negotiable between you and the seller as a buyer. You have time to perform your due diligence. You can get an inspection contingency. That's pretty fantastic. You have more than 15 minutes in a home. I remember during the pandemic when they were just allowing us to have one party at a time in a house, and people were lined up out the driveway just waiting to get into a home. It was ridiculous. So anyhow, those are some advantages of buying now. Hey, if there's anything that I can do for you, reach out to me. Again, Gary Nims, Windermere Real Estate. And you can also reach me at GaryNims.com. All right. Thanks, you guys. Take care and have a great day.